Yeah, people one of two about November business. Yeah, the first question.
Define the term motivation.
So when I talk about motivation, we're talking about factors that makes employees to want to put effort at workplace. So here I wrote, motivation is the factor that encourages employees to be productive at workplace. So those things that make them to want to be like, they're happy doing their job. So the second question says, explain two non-financial motivators that could be used for business employees. We talk about non-financial motivators. This does not involve finance or cash. So we can use job security. Employees are happy when they know that their job is secured. Like they know, oh, they have future in the organization. So because they have future in the organization, they may put more efforts and be committed to the job. Two, training. For training means giving them more skills and knowledge about the job. So if employers are able to invest on training for employees feel valued within the organization, and that could, encourage them to want to stay and increase their productivity. Next
So
one.
the two things are training and
Job security.
Job security.
Yes. Read, please.
Define the term ethics.
We talk about ethics. We're talking about principles that you put into consideration as a business, as an individual, in the course of your operations. The moral, the principle to know what is right and wrong about your operations, about your job as an individual or as an organization, which is basically social responsibility.
Be explained two ways ethics might affect the activities of a business.
So ethics might affect the activity of a business, one, because when it comes to ethics, we have the pressure group, those that will ensure that they pressurize you, they make sure you do the right thing with the environment, they make sure you do the right thing with the employees, they make sure you do the right thing. Cut across whatever your operations are, like child labor, they don't want it. So these are ethical part of operations. So the pressure group can influence your decision about going ethical or being ethical. So whenever you think about deviating, you remember the pressure group, like, oh, these people, the activists, they will come onto your neck and that will be a problem for you. That's the first point. The second point is that a business can also measure its objectives based on its code of conduct. Because let's forget about the ethical or the external now. Let's talk about the internal. We have the code of conduct, how we are supposed to work within this organization. So each organization have their own code of conduct. So whatever you do has to be guided with these things. So that means as an individual, as an employee, you have to, there's what called compliance. You have to comply with what the rules and regulations of the organizations are. So whatever you do in terms of carrying out your function, your roles, it has to be moral. It has to be morally done by you complying. That is, so also a business can also use internally, can talk about its code of conduct when it's carrying out or targeting certain objectives or aims.
Could you explain why the published accounts of the business
might give a misleading description of its performance? So it's a published account, it's a financial account. We're talking about the financial statement here. We're talking about the statement of financial position or the income statement. It could give you a wrong, a misleading or a wrong indicator. Why? Because one, it does not measure the non-financial aspect of your operations, which is like staff motivation. If workers are not motivated, you won't even have an account balance. Do you understand? So the publishing of accounts, whatever it is, does not reflect on the non-financial aspect. That's the quality of human aspect that drive the organization. So without the human or without employees putting efforts for the company to make profit or to gain revenue, there's nothing you could do about it. But published account does not talk about it. It doesn't talk about the human aspects that contributed to having that type of positive financial account. So it is misleading. That's the first point. The second point I wrote is that it does not reflect in the present and the future situation of the organization, because whatever account that is being published is from the past. So it's for the last accounting year. It does not reflect on what is happening right now within the organization or what the external factors external factors that are occurring right now. It doesn't talk about it, and it does not reflect, does not give us a guide about what happens in the future with the organization. So it only talks about the past. You get the point there, please. Then we go on to the question 4, right?
Yeah, define the term economies of scale.
So when we talk about economies of scale, it means a reduction in the average cost of production as a result of increase in output or as a result of expansion. Okay.
They explain the reasons why a business might experience this economies of scale.
As a business, you started expanding. Yes. So the first problem you could have could come from the hierarchy. Now you're having a wider span of control.
The communication.
Yeah, communication. So there's poor communication because you're having a tall hierarchy and a wider span of control. So this makes you to have a lot of managers. So in the course of having this kind of managers, communication might be slow, which makes decision making to be slow. So that's the first point. The other one is about motivation of workers. Now that you have wider span of control, before now it is so short, and workers can easily see the managers. They can easily talk to their senior members or to their bosses. But these days, because the span of control is wider and there's a long chain of command, so it's difficult. They become remote to each other. So workers cannot really talk to their managers. So this might become demotivating for them. So they get demotivated because they feel like they are just a single unit that is not valued within the organization.
Yeah.
We'll go to question 5.
Analyze the benefits of the business of market segmentation.
So first you have to define what market segmentation is. Market segmentation means business is trying to create a product or service based on the characteristics of customers. So it could be based on gender, it could be based on age, it could be based on income. So it could be based on religion. So these are when businesses try to figure out the characteristics of customers and create a product out of it.
Okay.
So what are the advantages of having market segment? The first one I wrote is about, it focuses on identifying the needs and wants of customers. So that means you are able to satisfy customer needs because you have a focus, you have targeted what this set of customers would need, and you have provided such product for them. So it creates customer loyalty. 2, by segmenting the market, it helps the business to diversify. That means if you are segmenting the market, that means you are producing goods for Muslims, you are producing different goods for Christians, you are producing goods for low-income earners, you are producing goods for middle-income earners, you are producing goods for high-income earners. So you are able to spread your business portfolio, your product portfolio, and also you are able to spread your risk. So if the Muslims are not buying the product meant for Muslims, the Christians might be buying the product meant for Christians. So if low-income earners are not buying, high-income earners might be buying. So you use the undoing of one product to cover up for the ones that are doing well. So that means you're able to spread your risk. Do you get the point, please?
Yeah.
And the third point I made is that it creates more revenue for the business. How? Because you have different kind of products, different kind of services for different customers. When we talk about characteristics of customers, it's not like it's going to be mass, because some customers have the same identity. Like, okay, we are providing a product for female. They are all females. So that means all females could use the product. Do you get it? Oh, we are providing product for low-income earners. We have high numbers of low-income earners. Oh, we are providing for high-income earners. We have large numbers of these people. So you are still going to be producing in mass. So it allows you to enjoy economies of scale, which means you are going to still be able to reduce your average cost of production, which could allow you to make more profit.
Okay.
Is it clear? Then we go to B.
Discuss the view that marketing is the most important function of a business that manufactures and sells motor cars.
So first, you have to define what marketing is. Marketing is identifying and anticipating the needs and wants of customers. So if that is marketing, for a manufacturing car, what is the first thing you think about? You think about, because you want to identify what is happening in the market for cars, it gives you the opportunity to be effective. You can, okay, yes, cars, they use fuel. So what do we do about fuel? Customers will not want to be spending so much on fuel. Yes or no? So what are the kind of cars we have to produce that will be cost effective on fuel? So that creates a unique selling point for your business, because car manufacturers are in the mass market. So with marketing, because you're anticipating, you're identifying the needs of customers that use cars. So you feel, okay, because we can identify that customers will not want to spend so much on fuel. So let's find a car. Let's produce cars that are cost effective in terms of fuel. That's the first point. The second point I wrote is about, marketing of cars too. We could go market research, because marketing is part of marketing research. So businesses can also make research on what specs of cars customers need at this point in time. What price? Let's talk about the market research first. What specs of cars do customers need? What are the feedback we are getting from our customers? So that makes you to improve on the next one you have to produce. So with marketing, market research allows a business to improve the performance of its product, of its cars, based on the feedback it gets through the research. The third point I made is marketing mix, which is price. So when we have marketing mix, we have the 4 P's. We have price, place, promotion, and product. But here I'm talking about price. So with marketing mix, which is part of marketing, allows a business, a car manufacturing business, to know the exact pricing strategy it could use when it's launching a new car into the market. So, should we use a price skimming? Or should we use penetrating pricing? What should we use? Or should we use competitive pricing? But for cars, sometimes it's better to use price skimming, because the perception of customers about cars is the more expensive the car is, the more quality it possesses. So that's about that.